And what we would be looking for is, in a case like that, for the residential component of that building, we would want that to be 51% of the total square footage.
Yep.
49% could be commercial.
Okay.
We would consider that mixed use, and we'd write it on the residential platform. We would keep it in our portfolio in-house.
Okay.
And the reason why that's a value to folks listening out there is that's a much simpler product to qualify for compared to going to get a commercial loan.
Okay.
So, we're not going to ask what you had for breakfast 3 weeks ago, things
Right.
like that, So,
Yeah.
You do need a sizable down payment. You typically need a 25% down payment. So we want you to have your own skin in the game.
Yep.
Credit qualifications doesn't have to be pristine, but you've got to have solid credit, the ability to repay. And we will make those loans.
Yeah.
And we write them, and we write them all over, not just in Rhode Island. Again, we're not looking for something like that in Florida per se, because we are a local bank.
Yeah.
It's not something we can sell off after we close it. We hold this, and we collect the payments, and but we have an appetite for it. Rhode Island, Mass, Connecticut.
Now, where do you? The bank just converted or changed names beginning of this year, earlier this year, in March of this year, and are there any changes coming and that you're aware of in 2025 for the bank? I'm kind of blindsiding you with this. As far as, is the bank looking to expand? Are they looking to just like really, retrench and get firm here in Rhode Island, or like what do you guys see as the forecast for, the mortgage lending business as far as Shoreham Bank?
The forecast for that is we're always looking to expand.
Yeah.
Always looking for opportunity, because really what's going on in the mortgage space the last 4 or 5 years, right? Volume has decreased for everybody across the board.
Yep.
There have been less home sales. Interest rates are higher. There's less refinance activity. So when that happens, either people get out of the business or companies kind of retract from it. They consolidate their operations, or you've got to find other ways or other avenues to grow your business. And before I get to that, a lot of times when there's less business like this, everybody's competing against one another. So when you opened the show, one of the things you mentioned was competing lenders, may all have various pricing. It's pretty close in this market today. Doesn't mean you don't want to speak to more than one person, but everybody should be fairly close.
Yeah.
Margins are down, and you got to be competitive, best foot forward right off the bat.
Yep. Yeah. I had lunch with a friend of mine today, another really great realtor, Emilio DeSpirito. He owns Engel and Volkers down in East Greenwich. Yeah. And Emilio, he has his own radio show too, and he and we've been friends for a million years. And we were talking about how, it's so important for the consumer to have a good rapport with their lender. And both he and I were saying, it's like, we stay in our lane. We talk about real estate. And if I refer a client to Sean, and they say, oh, what are his interest rates? I said, I have no idea. I said, you have to talk to Sean, and he'll give you the best rates for your situation. Well, how many points? I have no idea. It's something that changes all the time. You've got to talk directly with Sean, because a lot of times I've found as a real estate professional, when you see lending institutions that talk about rates and points and advertising, and you don't see it that much anymore, but there's usually that's usually like a lost leader or a teaser just to get you to pick up the phone and call them, or go online and submit an application, or whatever it may be. Because if that's the first, in my opinion, my professional and personal opinion, if that's the first thing that a lender is going with to get you to call, to reach out to them, that's not what you should be leading with. I mean, putting your best foot forward. And again, we're fortunate. We have a lot of great lenders. Sean is a good friend of mine. He's a great lender, great communicator, and anyone who listens to this show knows how much I value communication with my vendor partners. And Sean is great like that. Talking, phone calls, emails, text messages. It's impossible not to communicate well with Sean, and because Sean goes above and beyond when it comes to that. And that's what as a consumer, that's what a consumer should value, because you don't need someone that's not going to be responsive when you have a question.
Sure.
Buying a home is stressful when it's a perfect situation. It's a stressful experience, and we live in an imperfect world, and there are lots of surprises that come up. And of course, if you listen to the show, surprises are never good when it comes to real estate. So it's important that we try to minimize the number of surprises that can arise, or if we think something could arise, a surprise could pop up later on, we identify it early on in the transaction, and we try and perhaps manage expectations, put it out there, and then try to resolve that problem so that it doesn't blow up 2 days before closing. Okay, because usually if something blows up 2 days before closing, people are not going to be happy because they're going to be very inconvenienced. So what we try to do is we try to minimize the chance that something like that is going to happen, and that's why communication is very important. So if your realtor, your lender, your closing and title attorney reaches out to you, respond accordingly, because it's important. And it could be something simple if it's with a lender regarding, usually it's regarding paperwork that has to be provided, or maybe updated, bank statements or things like that. But it's important for the consumer to also be very responsive and communicative with your lender. Sean, how have you found, like, most consumers, just kind of across the gamut, are most consumers pretty communicative, or are they kind of like, a lot of times a hot mess when it comes to the paperwork?
I would say most people are responsive and on top of their game buying a house, right? I mean, it's the biggest purchase you're going to have, but you do have some people that are not as organized, right? Or
Right.
life comes at you fast, right? It's busy. You got kids. You're running around. Everybody. You're working. Things happen. So some folks are better communicators than others. Just like on our end of the business, right? So to your point earlier, it's always good to over communicate.
Yeah.
I always say to people, look, you don't buy a house every day. I originate loans every day. I speak to people every day. I don't want to be a pest, but I want you to know if you have questions, please ask.
Right.
And if we try to address the majority of things up front, they've been doing this a long time, so you kind of can anticipate what's going to happen before it does, so you're on top of everything.
Yeah.
And I think people appreciate that. When I first got into business, Joe, one of the interesting things was I had a boss. I don't know, 23 years old, and he used to say, well, how would you feel? Don't forget on a Friday, call your customers, because him and his wife are out for dinner Saturday night, and that's all they need is, this was back before email and all that, and that's all I need is them asking each other, well, didn't you speak to Sean, or did you speak to him, or what's going on with that? And then they start arguing at the table, and so it's kind of it stuck with me all this time, where don't leave any stones unturned.
Yeah.
I think people appreciate that too. That's how that's how people say, yeah, I got your name from so and so, or they, so same thing on your side, right? It's, treat people the way you want to be treated, I think, is the golden rule, they say, and it's worked out well.
Yeah. I mean, because the thing is, it's and sometimes, we're not always the bearer of good news.
Sure.
Sometimes we have to, bring bad news or unwelcome news to the client, and either if it's, the appraisal didn't come in where we wanted it to, or your rate's going to go higher because you were late on that cell phone payment, or whatever it may be on your end. Or you have to escrow more money, so they have to bring more money to closing. No, the seller doesn't want to negotiate those repairs with you, so you're going to have to just back out or move on, back out and move forward. So it's a challenge when we have to communicate unhappy or less than desirable news, but nevertheless, we that's part of the job. We have to do it. And we were talking before off air how part of my job as a realtor, and I think yours too, is we have to be cool, calm, and collected. If everything is just blowing up all over the place and the consumer is very excited, air quotes, excited, I can't be the same way. I've been through this a million times, and I know what's ultimately going to happen. Sometimes, that consumer may not be ready to hear that news at that instant, so they need to, take a period of time to have a couple of deep breaths and maybe an adult beverage to calm down. And then at some point we'll have that conversation so that they can be informed about it. But part of my job is to not just manage the transaction, but then manage the client as well, because as long as they want to move forward to get to that transaction, that's what I have to keep in my mind. I can't be a barometer and respond to their excitement, their emotions. And I know you well enough as a friend and as a professional, fellow real estate professional, that you're that way too.
Yeah, sometimes it doesn't. It's not a joyous part of the business, but it's one that has to be. It's a part of the business that needs to be addressed.
Right.
Right, and the sooner the better. And I think people appreciate our candidness, right?
Yeah.
And if it's something, and the majority of the stuff, when those types of issues, like you say, in air quotes, arise, it is due to something unforeseen, right? Especially on your end, there could be an issue with, a septic or something like that, you don't know until you peel back the onion.
Yeah. I mean, sometimes there are some things that we can do to try and, potentially mitigate the issue with, a homeowner's warranty. Let's get that. Let's see if we can get the seller to pay for that, or let's see if we, can somehow get that funded so that anything does pop up in the first 12 months. As a new homeowner, your repair costs will be covered. So that's a kind of a tool that I keep in my toolbox and use that on certain occasions. Because sometimes people, they freak out over stuff like that.
Yeah.
I mean, it can also make the difference between being negotiated down as a seller, or being able to get your asking price and then, I'm going to give you a warranty with your purchase of this house, even though the boiler's 30 years old, or the furnace, or the air conditioner, or whatever. I feel confident it's going to work, but if not, you've got something that'll repair it for you at no cost to you as a new homeowner.
Those have become a lot more popular recently, though.
Yeah.
I feel like, right? It's and I mean that would ease my concern.
Yep.
Buying a home, right, Joe? You've owned your house for 25 years. You stand by it. You 1-year home warranty.
Yep.
I think that's very helpful.
Yeah.
It's not that expensive either, right?
Right.
I mean, it's it's
less than $1,000. Yep.
To kind of keep everybody to keep the deal together at times.
So.
Yeah.
Yep. Folks, if you're just tuning in, you are listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM 1380 on the AM dial. We're here every Tuesday evening from 6 to 7 o'clock p.m. And this show is for you, the consumer. We try to have guests on every week that offer information that could be helpful to you. And tonight we have as our special guest Sean Hogan. Sean is a mortgage lender, a veteran mortgage lender from Shoreham Bank, formerly known as Home Loan and Investment Bank, excuse me. And now it's Shoreham Bank, so that's all you have to remember is Shoreham, like the name of Block Island, Shoreham Bank. And they can help you out with either a purchase money mortgage, a second mortgage, an equity loan, or an equity line of credit. That's a nice thing that they have that Sean can offer. Now, Sean, if someone wanted to reach out to you, they had some questions, what would be the best way for them to reach out to you?
A couple of different ways. Best probably would be my telephone, 401-258-2096. Or you can always email me. It's shogan@Shoreham, SHOREHAM.bank. So when you say Shoreham, it's like Joe said, New Shoreham in Block Island, but it's just Shoreham Bank. So shogan@Shoreham.bank, or 401-258-2096. Happy to answer any questions. If you're listening to the show, please let us know, and we'll help you any way we can. We get a lot of people sometimes that call just looking for advice that, you don't necessarily have to call or reach out only when you're in the market. Feel free. We have people that people that stop in my office and they knock in and show up with 2 cups of coffee. They know me well, all right.
Right.
All right, perfect. I got time for you. Let's go. Go to the conference room and have a coffee, and it's great, right? I mean, the last time you came in, you brought pumpkins, I think, right? And so.
Yeah, exactly. So now I just want to point out, folks. So the email, it's Shoreham.bank, not ShorehamBank.com, which Remax, my email is remax.net, so it's Joseph Luca at remax.net. And it's people quickly, it's easy to put remax.com, which is never going to get to me, and it's not ShorehamBank.com, it's Shoreham.bank. So it's S. Hogan at Shoreham.bank, B-A-N-K. It's actually kind of convenient now that we have all these, URL extension, what do you call those doohickey things, other than .com. It's kind of cool that we can use those for whatever industry we're in.
Catching on.
Yeah. So, folks, we've been talking about real estate, and the market has been very brisk in the state of Rhode Island and southern Massachusetts, stronger here than in other parts of the country. In Florida, I have colleagues down there. Property values, believe it or not, are decreasing in much of Florida. We're not talking about like the hot spots like Miami Beach, but other, where the regular people live, as they say. Property values are declining in parts of Florida, parts of California, but here in little old Rhode Island and southern Massachusetts, property values, we've been bucking the trend. We're not only accumulating equity year over year, but we're accumulating it at a rate that is above 10%, or in the case of multifamily homes, just a smidge under 10%. The median price of a single-family home in Rhode Island is approximately $500,000, which just, I'm in the business, I still can't believe that. And it's amazing, but it's a sign of the times. It's economics 101. More demand than there is supply, so when you have that disparity, that's going to push prices higher. So, it's not because sellers are greedy, it's not because realtors are greedy, it's not because appraisers are greedy or lenders are greedy. It's just a sign of the market, okay? And because we have more buyers than we have sellers, prices are getting pushed higher. Now, what you're seeing is one of the reasons we're having more buyers is, as I've mentioned in previous shows, you're seeing more intergenerational living, grandparents living with parents and grandkids. You're seeing folks parents taking an equity line or a home equity loan out against their home and giving a big chunk of cash to the kids so they can buy a home themselves, because more than 1 out of 4 homes are cash purchases, and probably another 1 out of 4 homes are purchases with a large deposit. Okay, by large deposit, I mean more than 15%, 20%. So, it's a big chunk of change. If you're looking at a $600,000 house, 10% down, which is not a huge deposit, is $60,000. So if you're going to put 20% down or 30% down, you're talking about a big chunk of change. And those are the things that can make it challenging for a first-time home buyer or any home buyer who doesn't have access to that kind of capital to put down. If you're just coming in with no money down or a small deposit, that offer may not be as competitive, as viable as an offer where someone's coming in with a larger down payment, even if it's for a lower purchase price. Okay, it's going to be more of a secure thing. Sean, what have you seen? Have you seen, I think you probably skew kind of higher end, but what have you seen with, as far as your buyers are, how many are coming in with a big deposit? How many are coming in with like a, single digit size deposit?
Sure. So, we see both. Obviously, we do see both. To your point, though, Joe, there are a lot of people that are current homeowners that have lived in their house 10 or 15 years. They've got a lot of equity in that property. They go to sell it. They're cashing out, so to speak. So they have a large down payment for that next move. It's not unheard of. People hundreds of thousands of dollars in equity gained from a property they're selling now to roll that over into the new purchase. For starting in January 2025, your Fannie Mae loan limits, these are with non-jumbo, is $806,000.
Okay, explain that a little bit for our listeners who may not be familiar with jumbo and loan limits and those terms.
Sure. So what that means to the consumer is you can borrow up to $806,000 on a conventional conforming loan. That's where you get your best pricing. It's a little more favorable to qualify than it would be on a jumbo. Jumbo loans are not difficult to qualify for, but you may have to provide a little bit more documentation. The pricing will be different than it would be on something on a conforming loan. It's just crazy, like you said earlier, being in this business this long. That I remember it was yesterday. It was 417,000.
Yeah, I know, really.
I mean,
I remember when it hit 400, and everybody's like, "Oh my gosh,
right,
wow!"
Right.
Yeah.
It went from 417 to 456, and I was like, "Wow, this is crazy!" Right.
Yeah.
Here we are, 6-7 years later.
In
right,
Rhode Island, yeah.
Right. 806,000. You go borrow $800,000 to borrow. That
Right.
doesn't. I'm not talking about purchase price.
Yeah,
and,
I know.
it's not even a jumbo loan, so it's things have really changed. But to answer your question a little more directly, so we see a lot of that folks that are selling a current property that have a considerable amount of equity to roll over into the new property, and we do work with a lot of first-time buyers too. So we're what's called the delegated lender with Rhode Island Housing.
Okay.
Now everybody in the state's heard of Rhode Island Housing. It's a quasi-government agency that's offers 0% down mortgages to folks in Rhode Island, to first-time home buyers. So the beauty of the nature of our setup is we close these loans in our name, and then we sell them to Rhode Island Housing after closing.
Okay.
And why that's advantageous to the consumer is, well, we have a real mortgage division inside Shoreham of seasoned people who have done this. It's a little bit simpler than going direct to Rhode Island Housing.
So you guys, you do the underwriting in-house.
Everything. We
Yeah.
fund the loan. Excuse me. We fund the loan. We underwrite the loan. We process the loan right in-house. It's not to say that the folks at Housing don't do a great job. You and I know them all.
Yep.
They're wonderful people. But the programs change often. There's turnover there. So yeah, it's a little simpler. We'll close them. We can close them in 2 weeks if need be. And when I say that, I don't really even like saying that. Why would I need to close a mortgage in 2 weeks?
Right.
There's got to be a problem if that's the case. Typically it's a 30-day cycle, right? But
Yeah.
I bring that up simply because if you went to Housing, they'd never be able to do that that quickly. They're a tremendous operation over there, but there's only a handful of folks in Rhode Island, Shoreham being one of them, that are delegated. And what that means is we close the loan in our name, sell it to them after, without, we never have any issues. So if we weren't doing it right, they wouldn't allow us to be delegated. Being delegated is like a badge of honor, so to speak, instead of having to go directly to Housing. But so we see both. See both, and they're all, we treat them all the same. We treat everybody the same. The first-time buyer, some of these zero down on the multifamily, to your point, the multi-generational families, and I can see things starting to, things change, patterns change, the way we all live and evolve, it changes for sure. Some of these ADUs, these those dwelling units, the accessory, are going to be in the backyard. There's a lot of stuff coming down the roost that's going to change how we're all living.
Yeah, that's right, because the ADU is accessory dwelling unit, also known as an in-law, but they've really, the state of Rhode Island at the state level has, established criteria for what will qualify as an accessory dwelling unit, and at the state level, it's legal in all 39 municipalities. So if you have and it doesn't necessarily need to be occupied by a family member, but most people, that's why you want to put an ADU on your house, so grandma can move in, or the adult kids can move in, or whatever it is. But that can be accomplished now, and there are certain builders, contractors who are more experienced in working with the the zoning boards in certain municipalities than others. So it's important that you work with a realtor who is very experienced in where you're looking to buy a home and has relationships. So if you want to buy this house because you want to add an accessory dwelling unit to it, I can refer you to builders who can accomplish that. So you can add that value to the home right after closing. You can just start the ball rolling. But that's a great way to make a house more hospitable, more valuable to a buyer, because you can bring additional family members in, and that may be essential for you to ultimately make everyone's life a little bit easier and a little bit less costly. Because now, if grandma and grandpa are paying $2,400 a month in rent and you're paying $2,400 a month in rent, well, put both of you together, and maybe your mortgage is, totally going to be $3,500 a month. So you're saving some money, and it's something that you own, as opposed to grandma and you each paying someone else's mortgage. Okay, so there are a lot of things that you want to, that you may not be aware of as a consumer, that your professional, full-time, experienced realtor, like your humble host, could help you out with. And now, if you said, well, yeah, Joe, I want to buy something in East Greenwich, I may not have the market experience or knowledge for what's going on in East Greenwich, but I certainly have colleagues of mine that I could refer you to, or Narragansett, or Newport, or Westerly, who are great realtors, and they could take care of you in those areas, and they have relationships with contractors in those areas. We have, as a realtor, we have something called the Code of Ethics that we have to abide by. If you're just a real estate agent, you're not a realtor, you don't have a code of ethics, but I have to comply with this code of ethics. It helps me conduct myself and conduct my business in a manner that's respectful, professional, and ethical, not only for consumers, but for other business professionals, real estate professionals as well. And if I do not have adequate knowledge in a certain area, I should not be practicing real estate in that area. If it's geographical, or if it, I just started watching this show on TV called Lawman, and in the first episode, they're talking about mineral rights. You can own a property, but not own the mineral rights underneath it. We don't have any really incidents of that in Rhode Island. But if you're in Texas and other parts of the country, I'll sell you the land, sure, but then I have the right to everything underneath the land. And then I will lease back from you access to get at whatever it is underneath that land. So you can build your stuff on top of it, but it's, everything underneath it is mine. That's something I know virtually zero about because I don't need to. So if I had someone that was looking to buy that type of property and they wanted to be in Rhode Island or Massachusetts, I would refer it to someone who were experienced in that type of real estate. That's not my area of expertise, okay? And it's important for me to refer that out, okay? That's why when people ask me questions about financing, look, I don't know. I know that Sean's a great lender, and Shoreham Bank does a fantastic job taking care of their clients, their customers. So give Sean a call, and they'll take good care of you. Any thoughts on that, Sean?
I think you're spot on.
Yeah.
I think a lot of times for the lenders, or the good ones, it's the same thing. We don't want to overstep our boundaries, right?
Mm-hmm.
When consumer may ask a question about the transaction that's not specific to the financing,
Mm-hmm.
I'm not privy to that. That's between Joe and the buyers or the sellers,
Mm-hmm.
So we kind of, like you mentioned earlier, stay in our lane.
Yeah.
Well, what's your opinion on this? I don't know. I don't really have an opinion. I don't know enough, with some of the details of the transaction.
Mm-hmm.
So I think it helps everybody when we all kind of do that. And I think earlier in the show, one of the things you mentioned was, okay, you may see specific pricing advertised, right? And I think to myself, you put the news on in the house in the morning and you see various local banks and, the 30-year mortgage report is X.
Right.
To your point, that's a loss leader, right? That's the first, you put your best foot forward, so to speak. But if you look at the fine print, it assumes you're putting a 40% down payment, that you've got a 760 credit score, and when how many people are putting 40% down, how many people have a 760 score, middle score,
right?
So the middle of the three, so you may have one, but there's a
the other one's 560.
Yeah. So.
And I don't mean to laugh because there are people that get in situations, but that's a big difference.
Yeah, it's a huge difference, right? And we help them. We help them all, and even somebody with a 560. If we can't help you today, we can put you on a path where we'll sort of, I like to say, put you in the bullpen where if you do X, Y, and Z, well, that seventh inning will eventually arise for you, and you'll be in the game.
Yeah. Now, you guys, so you also have portfolio loans, okay? And I know you said you close Rhode Island housing loans, you fund them, and then you sell them to Rhode Island Housing.
Correct.
Talk a little bit about the portfolio loan and how that is a great tool for the right borrower.
Sure. So having a portfolio loan, being a bank as opposed to a mortgage lender,
Right.
we lend our own money.
Mm-hmm.
So we have our own deposits, which you see we have very aggressive savings rates. We want deposits, and then what we do is when we have all these deposits, obviously there's a spread between what we pay out on the deposit rates and what we're able to lend the stuff out at. And we will utilize our portfolio for things like non-warrantable condos. So, you obviously know what a non-warrantable condo is, but to the public listening, a non-warrantable condo may be a condominium complex that the budget doesn't have sufficient reserves in it, or there are too many renters in a specific complex, or there are other reasons, but there aren't too many of those nowadays. You don't see as many as we used to, but they are still out there. Or it could be a condo complex that's newly built and not complete.
Oh, okay.
A couple of phases are done, and there's only they're up to phase 3 out of 5. A lot of places won't lend on that. We'll put it right in the portfolio. Strength of the deal, right? It's case by case. So a lot of times when we're speaking with people, we go into some real estate offices and we start talking to folks, and they say, "You said you did this, and you said," hang on, hang on, pump the brakes.
Right.
It's a case by case scenario. So we look at the totality of the circumstance. It's not just I don't want to mislead anybody on the radio and say, "I heard that guy say he does non-warrantable condos." Well,
they can. Operative word is can.
Correct. We can, assuming you've got a down payment, assuming the credit meets the parameters, assuming.
And also the condo association. I mean, if they have like no budget and they never, their monthly fees are crap, and you're going to probably look at that loan differently than if it were a condo association that had like lots of units and was well managed and had good reserves and a budget and all the other stuff, which
100%.
Yeah.
Yeah, and that's one where once you had that conversation with a lender, and you go back to your agent, and maybe that's where when the agent is saying, "I don't know if this is the best complex for you."
Exactly.
Right. So I just want you to understand, as you enter into this transaction, in the event you were to sell this downstream, you may have some of these issues. So you'll have to find a potential buyer that was able to navigate the storm the same way you did, right?
Yep, so, and that's important, and that's one, I tell all of my buyers, no matter what they're buying, you have to think about when you are going to sell this property, this house, this condo, because at some point, whether it's 2 years down the road or 52 years down the road, someone's going to sell it, you or your heirs. And if there is anything you can do when you're buying a home to make sure that it does not have issues that could be challenging when it's sold in 2 years or 52 years, try to take advantage of those options when you're buying the home. Folks, we're coming to the end of the show. I want to thank Sean Hogan from Shoreham Bank, veteran mortgage lender. Sean, what's the best number for people to reach you at?
401-258-2096.
Great.
And the email is shogan@shoreham.bank.
Great. Okay, folks, thank you very much for tuning in. We will be back next week, same bat time, same bat channel, and I'll see you then. Take care, guys. Bye-bye.
Thank you, Joe.
You're welcome.
Thanks. That went quickly.
It did. Take care, guys.
Yeah, sorry.
Thanks.
Yeah. How was it?
I think it went well.
You did.